All right, good morning, traders, and welcome to the opening bell. Today is Monday, June 15th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. We are coming into a session with a lot of headlines coming fast and furious. Obviously, over the weekend, we got news that there's been a resolution reached, or at least a memorandum of understanding between Iran and the U.S., which should reopen the strait, lift the embargo, and certainly gives us another 60 days for further negotiation. So the markets are taking solace in this. Gold is trading higher. The US dollar is trading lower. Stocks are trading higher. And the expectations for an imminent rate hike, as it were, is starting to ease. And that's been part of the pressure that's been hitting the US dollar. The FOMC rate decision is on tap Wednesday. We have a couple of other central banks, including the Bank of England, the RBA, and the Bank of Japan on tap over the next few days. We'll be going over all the US dollar crosses and more. Any questions or trade setups, feel free to throw them on the message board at any time. We'll be getting started in just a couple of seconds. All right, great to see everyone in the room. Hey, Angie, Ashish is in the house. Chris, Christopher, Dan, JP, Kevin, Latanya, always great to see you. Maury, Mohammed, it's a packed house. Won't get to everyone, but great to see you guys this morning. Here's the DXY trading right into support. So remember, last week and a half, our focus has been 100 spot 15 to 35 as a 2024 swing low. We had the August highs, the November high. It was loaded. We marked an outside reversal candle on Thursday right off that zone. Your quintessential exhaustive candle happened in Euro. Um, it happened on a couple of different crosses. And here's the push now testing support 99.49, 99.50, the same zone we were talking about last month. The 618 of the drop from the yearly high, the objective January high, last month's high. Break, now that's support, and it converges on the uptrend of the basic pitchfork we've been tracking from the May lows, right? 3-point confirmed slope. We're there right now. I'm looking for a response here. Now, if we settle below 99.50 on a closed basis, guys, that threatens a pullback towards the monthly open. That's down at 98.95. Okay. For the bears to reassert control, for us to say, hey, a more significant high is in place here and dollar is heading lower, we would need to see a break below 98.68. 98.69. That's the 200-day moving average, the May low, the August high day close, major pivot in price. That's what would put the bears firmly in control. Right now, this is near-term bullish inval, though. If it breaks below here, not necessarily bearish, but we're no longer bullish. It would suggest that there is a threat and that uptrend has been compromised. So I'm looking for reaction right here, right now. Lots of event risk on tap with the Fed, obviously, on Wednesday. Here's what the Fed meeting is going to look like. Guys, this is the link. I'm going to put it in the description box so you guys have it. This is the link where you're going to find the latest Fed report come out on Wednesday. I'll give this to you again on Wednesday morning, but this is where you'll have the latest presser come out. Remember, our last summary of economic projections showed the Fed increasing their growth prospects while at the same time upping the projection for inflation. This is pre-war, right? Now we got the war going on. We got the oil prices, which surged. If this is adjusted higher, which I don't suspect it will, you can expect those interest rate expectations to really solidify for a December hike. If we start to ease, okay, and we go back to where we were before the sprint, which was 2.5, I think, before they upticked it, that would suggest that they see this inflationary spike based on the energy crisis as transitory. I hate using that word. You're not probably going to hear anyone use that word, but they're basically suggesting that, and that there'll be no need to necessarily tighten policy. We are also looking for the dot plot and where the committee stands with regards to the 2026 projections. Remember, there was an argument at Powell's last Fed decision from the committee members who wanted to remove the easing tone from the commentary of the presser. So it's going to be interesting to see if Warsh is more in line with doing that, or if he wants to kind of keep that pad there and keep the door open. As it stands right now, markets have toned back a little bit, but the expectation is still, roughly almost 60%, just under 60% that you're going to see at least 25 basis points this year. So that's where the focus will be as we head into Wednesday's Fed decision. Watch this right now. Ahead of that Fed decision, we're testing a break or attempting to break near-term uptrend support. Here's Euro. So the breach here looks a little bit more prominent, but it's the same exact thing. The level we had drawn in the sand was 1578 to 1598. Remember, that's a big pivot. Here's Euro on the weekly charts. This is the 618 from the rally off the yearly low, and it's also the objective low close from back there in January. So a major pivot in price. We're trying to break through it this week. Obviously, we need a weekly close above, but it is a pivot nonetheless. You can even look back to last year. The highs that you registered back here in April was right there. So what does that mean for us on the daily chart? Watch today's close. If we close northbound of 1598, basically 116, it would tempt further gains. Here's the 4-hour chart, and this is why I'm a little bit more hesitant near term. If this is a break early in the U.S. trade session, we should start to see some acceleration nearby. Momentum is not overbought. If it were, I actually would have liked this to be a breakout, but we're not quite there yet. So watch this on the euro. Watch DXY support. Watch euro at resistance. We really need to see some inflection early in the week if this is going to hold. Aussie dollar testing resistance on the near-term slope. So Aussie mounted an outside day reversal off of downtrend support. We talked about that last week. The rally held right at the median, right at that 25% parallel on Friday, literally right there. You can't see it on a close basis because we popped through it already, but here's the pop. So the big resistance zone is former support. We went over this in the last webinar. We went over the last couple of reports. 71 was huge. That was support into the close of April. That was the low day close for May. That break was the origin of this latest decline. That's now resistance. Converges on slope resistance basically into Friday. Here's what it looks like on the 4-hour chart. Last week's high is being tested right now. The median line is being tested right now. Recall on Thursday and Friday, we were talking about, actually it was Thursday, that looked really, really precarious. The down break, a break of downslope support, you'd want to see acceleration. We didn't see that. Later that day, we closed above 70, and that capped the decline. So we're testing the median line now. Initial resistance, if this breaks, is 71. That's near-term bearish invalidation. If we break above 71, it would suggest that you're basically a more significant exhaustive low might be in play here. So that's what I'm thinking about with Aussie. I'm neutral here. We're right at resistance. Could see another pop, but that's sort of the main level that would need to be beaten by the bulls. Key support still 70. Trend support is still down at 69.40s. Okay, that's the uptrend from November, and that's the downtrend from the yearly high. So not out of the woods yet. Recovery's testing last week's high right now. 71 resistance. RBA on tap later tonight. No change is expected. Questions on Aussie? Okay, dollar CAD is in a similar scenario in that we're testing major resistance, but that resistance failed into the close of last week. It was 39.82 to 39.77. Remember, by dollar CAD's part, the reason this is so significant is because it's the objective range highs for the year and the 2022 highs, and all that stuff is all stacked up right there. The 2026 swing high from March is there as well. We closed basically right there, a couple of pips above it. So what do you want to do with that? We're not in overbought condition. It's very, very dangerous here. We're at resistance. We're at resistance. And the breakout would legit give you a nice swing higher if it does resolve. But we're still here. We've been talking about the fact that daily is in overbought condition. So I can't fade this while we're in overbought condition. With the same time, we're not seeing that upward thrust above 39.82 gain any measure here. So I'm cautious. You're still constructive above 39. That's last week's low and that slope support. But here we are holding right below 39.85. Okay, look, the weekly range high, Sunday's high, basically yesterday was 39.91. Initial support is 39.42. Okay, that's the September high day close and the October low day close. It was a very major pivot last year. Look at this. Look at this on a close basis. You see that? That's now near-term support. Okay? Bullish invalidation, last week's low, 38.99, basically 39 proper. So initial support, 39.42. Losses should be limited by 39 if CAD is heading higher, dollar CAD's heading higher. You need to close above 39.91 to mark resumption. You're looking for 40.35, potentially even 41, but 40.35 is 2 equal legs off the low. I'd be looking for a reaction there if we get it. Pretty limited on event risk this week from Canada, so look for the dollar to be a major driver in this pair. Questions on dollar CAD? Okay, the BOJ is on tap. 25 basis point hike is expected as they try to combat the inflationary concern there. That's already priced in, guys. Dollar CAD, or dollar yen rather, still trading right below major resistance, 60.36 into 60.73. That's still the major zone you need to crack. That caught the yearly high. It caught the yearly high close. It's a 618 extension from the advance off the yearly low, and it's the 2024 high week close. So this was the intervention level where the BOJ and Japanese officials intervene. So again, this is a dispute between the technicals testing resistance within the confines of a broader uptrend and the X factor of the Japanese officials who could step in at any time. Levels are pretty clear though. Near-term support, monthly open, 59.27. That's the objective monthly open, and the objective monthly opening range low converges on upslope support basically into Wednesday, Thursday of this week. That's near-term bullish inbound. Questions on dollar yen? BOJ tonight. Okay, last but not least, really quick, just a quick update on Swissy. I don't cover this every day with you guys, but I wanted just to cover that pullback. Remember we were talking last week about that test of uptrend resistance looked really, really precarious. You had divergence all up into those highs, price action making higher highs, the oscillator making a series of lower highs, holding that slope. That exhausted on Thursday. That pullback now testing the origin of the breakout. The objective yearly open, the 618 of the November decline, this major pivot in price. Look at my cursor. Is 79.25, 79.26. We're testing that right now. Just lower is the 200-day moving average. If that breaks and we break that slope, you will have invalidated the May uptrend. So dollar Swiss approaching a major pivot zone. Slope support comes in just lower at the 200-day moving average, looking for possible downside exhaustion here if that uptrend is going to hold. But dollar Swiss testing a major pivot support right here, right now into the opening of US trade. Okay, that's everything on the FX front. Let me know if you guys have any other specific pairs you want to cover. Here's gold, really strong rebound now, taking us back above that 42.12 level. So made a slight shift in the levels here in the last webinar. The new low day close, remember that March low was the low day close for the year. The new low day close was Thursday's low. That's 42.12. 42.24 is the 100 extension. That's now near-term support. I want to see any pullbacks hold this level if gold is heading higher on this stretch. Next upside targets, again, 200-day moving average gives you 44.48. Key resistance is at the monthly open. The monthly opening range highs all come in at 45.40. That's the breakout that would suggest much more significant lows in place and the potential for a larger trend reversal. All things held constant, we want to stay supported above 42.12 if gold is heading higher. Make sense? Now remember, the thing to keep in mind on this week is that if Warsh & Co. come out more dovish, less hawkish, that's going to be positive for gold. Gold does not pay a dividend. Higher rates are going to be a headwind for gold. So you're seeing the market is pretty much playing out pretty clean with regards to the backdrop here. Where is the link that you mentioned? It's in the chat box. If you open your chat box, guys, you should have the link. I threw it over. I just sent it over again for the Federal Reserve meeting calendar. I'll send that over every day this week ahead of the release, so you guys have that available. But at least for me, I like to get that projection material as soon as it comes out and kind of dig right into the metrics to see what the Fed is looking at. That is gold. Oil. So You guys know the level in here. I can see the smiles in your face right now. We all talked about 85 for weeks. That's the high day close for the year. Registered on March 9th when we hit $119 in price. The close of that session was right there. It was the low day close for April, and we just broke that, clearing this multi-month consolidation. That drop takes oil into key support. I tweeted this chart last night on X as it was happening, highlighting 79.60 into 80.50. That's the 618 of the rally off the December low. So the entire yearly range. It's going to be the 2025 swing high and the high day close. And it's the objective low for April. I mean, you can't make this stuff up. It's all stacked right there. Oil's trading at support right now. Now, a daily close below 79.60, well, then you're looking for a much steeper decline. The next major level doesn't come in until 74. 73.84 is two equal legs off the high. The 200-day moving average is right there as well. If this breaks, that's your next downside pivot. The yearly open comes in at 71.90 also, so this whole zone. But right now, right here, you are testing support. Look at it on the 4-hour chart. Same slope. I can't believe this same slope is still holding. Remember, we added this a couple weeks ago. I told you it's a modified slope. I don't have enough conviction on it. You got some really nice inflection last week. You got a break below the median line. You're testing the 25% parallel now. Further highlights 79.60 into 80.75 as support. Look for reaction there. If it breaks, can't make this up. 200-day moving average converges on the 100% extension, converges on downslope support. Basically into Tuesday, Wednesday of this week, that gives you 73.84. So oil is testing a major pivot in price at multi-month lows. If we are heading lower on this stretch, initial resistance now, I want to look at 85 obviously again, but that's initial resistance. The monthly open comes in at 87.73. So this whole zone converges on the median line. Bearish invalidation at 91.78. If you break above that 2023 high day close again, in that kind of scenario, you'd assume like kinetic conflict has broken out again, or someone reneged on the negotiation. Something really bad happened, but those are the levels that you need to know. Right now, oil is testing a major pivotal support at 79.60 into 80.75. Watch the close of the session. All right. Mondays are always a little bit difficult with back-to-back webinars, but I think we got through it in good fashion, guys. Do let me know if you have any other questions or trade setups you want to review. The event risk starts tonight, okay, with the RBA and the BOJ early in the week. The BOJ is the one expected to hike rates. The RBA will be looking more at the accompanying commentary. No changes expected. And we'll be giving more updates throughout the course of this week, both on X and in the opening bell as we get closer to the FOMC. It seems like they're going to be in a more comfortable scenario. The best case scenario is that some sort of agreement would have came out of the conflict of Iran right ahead of the Fed. Looks like Warsh is getting that handed to him on a silver platter. So we'll see if that puts them in a better positioning on Wednesday. All right, we'll go ahead and wrap it up here, guys. Best of luck trading, and I will see you tomorrow morning, bright and early, for another opening bell at 9:30 Eastern. Until then, best of luck trading, guys. God bless.